what is beyond governance? Like this is all just governance. And I guess people don't really think about it, but governance is like really, really important. Um, as illustrated by, yeah, Somalia versus Germany, or like North Koreans and South Koreans are the same. And yet now they have like vastly different economic outcomes.
Today, we launch our new podcast where we talk about our community members, the futarchy background, and we explore market dynamics and futarchy with them. So in general, the podcast will be in two parts. The first will be a little bit more personal. The goal was that community members hear each other's stories, and then we discuss futarchy and market dynamics. Uh, so I guess we should get started. My first question would be, who is Proph3t? And did you work in another industry before crypto? If so, which one?
Sure. Yeah. So I'm a programmer. I started in Web 2 slash Silicon Valley as a software engineer. And I did that for a while. And then I discovered, well, I knew about crypto for a while, but um, I really got into it when DeFi summer came around. And I saw, like, I still do believe that DeFi is the future of finance. And I've always been kind of a markets nerd. And so I really love DeFi and still do. And so yeah, I worked in DeFi for a while and then became Proph3t, and now I've been
And,
working on futarchy.
and how did you become a market nerd? Did you read books about market? Were like some family members introduce you to the stocks market, or how did it happen?
Yeah, that's a good question. Yeah, I think family members talked a bit about the stock market, and I got a little bit into it. I my like strategy was to try to figure out. I mean, obviously it evolved over time. Like it started with pretty stupid strategies. Um, just like, oh, I like this product, so let's hold this stock. But over time, I kind of evolved into what I called or call career risk capital. So I would essentially try to figure out like places where money managers would not be able to buy something because, or like they could, but they would take career risk by doing so, because that would be like a signal that something was underbought, and I would try to buy in those times. Um, and yeah, longer answer, I guess. But yeah, that's how I got into it.
Nice. Okay, and then I think crypto is the ultimate career risk. At least it was at the time. Um, okay,
Yeah,
and
for sure.
did you notice many cultural difference and efficiency in between um, those two industries?
Silicon Valley and crypto. Yeah.
Yeah.
Yeah. So I actually much prefer Silicon Valley's way of working. Like obviously no place is perfect, but Silicon Valley is actually pretty nice. Like you've got a bunch of long-term people, generally, like obviously exceptions, but by and large, people in Silicon Valley are long-term oriented and they're focused on building products that deliver actual value to consumers. And they want to get rich by doing that. Um, and Yeah, like still crypto is not really like that. Like crypto, people are very short-term oriented. People don't really care about providing value to broader society. They just want to get their bag and then like get out. And yeah, that kind of sucks. We're hopefully going to try to change that a little bit because part of like culture is to a large extent influenced by incentives and like part of why Silicon Valley is like that is because it's got like these specific incentives. Like, for example, people are illiquid, right? You can't dump your equity on retail. It doesn't happen. And secondaries are pretty uncommon too. So like you're pretty much only getting liquid at time of IPO. And if you IPO, you must have built like it's very hard to IPO. It's kind of untenable to IPO if you haven't built something that's like actually valuable and used by regular people or like used by businesses. So yeah, I think that's the main difference is the short-term orientation and like extracting value in crypto versus like providing value as well in Silicon Valley. Of course, people want to get rich in Silicon Valley too. They just like do it through other means.
And that's the reason why you try to incorporate some of the Silicon Valley pieces into the metadao. Like, for example, the option package you want to design resembles a lot more Silicon Valley way of doing long-term lock and vest. than the kind of fast liquidity we have in crypto, right?
Yeah, totally. Like the current meta in crypto is, yeah, like a 1 year lock and then like vesting over that period, which, yeah, I don't know. I've seen a ton of teams where like, okay, then a bull market hits and then the insiders get liquidity and dump, and now they're all like, they've all made it, and so they kind of take their foot off the gas. Obviously, I like, so yeah, and what I'm proposing for metadao is we do long-term options so that they don't, like, you don't get any liquidity for a long period of time. Right now, the number is 4 years that we're throwing up in the air, but even that's not like perfect. Like it would like I don't know, we were talking, Nico and I were talking the other day about DYDX. So like DYDX has been around for what, like 7 years, was it? Or 8 years or something? Um and hasn't really made any dent in the global derivatives market, and yet still has like a high FTV that insiders can like dump on. Um so dump into, I guess. And so like our system doesn't really solve that, right? Like tokens will vest and unlock in 4 years, but if we haven't made like an impact in, I guess, the governance space by then. But yeah, trying to be at least better than the current scheme.
Yeah, 100%. And it's for the YDX, for example, I think they should have tied it to metrics ideally, but defining metrics ahead of time is very tricky, and you need a way to know if the metrics have been met or maybe adjust them along the way. So it's tricky to find a perfect solution today. Maybe it will be easier as more team innovates around that. Maybe we'll innovate around that with metadao. But for now, it's already a big step in the right direction to do this alignment of incentive and long-term locking that you've proposed, and most of the people are behind you on that. So that's great. When you started the metadao, you wrote a few blog posts and a few tweets about the importance of institution, and you often compare Somalia and Germany on how different the institutions are there, and the impact it has on the human lives of people living in these countries, and why we need to create better institutions fast. Can you share a bit your thinking behind that? How do you create institutions? And do you think futarchy is going to become one of the main institution thing?
Yeah. And actually, so when I was at Mountain Dow, I was talking to an investor, um, not an investor in metadao, just an investor. And she asked, like, once I explained futarchy to her, she was like, okay, that's cool. But like, what do you guys plan to do more than governance or like beyond governance? And my response was like, what is beyond governance? Like, this is all just governance. And I guess people don't really think about it, but governance is like really, really important. As illustrated by, yeah, Somalia versus Germany, or like, I mean, pick any country with shitty institutions compared to any country with decent institutions, right? Like the main difference between Somalia and Germany is the institutions, which is like kind of a vague concept, but essentially it's like the incentives, like the rules of the game. It's not the like the government, like how that operates, what rules there are, and whatnot. Like it's not, for example, natural resources. Like there are plenty of countries in sub-Saharan Africa that have great natural resources, but still suck to live in, and suck economically. It's not really culture either. So like North Korea and South Korea had pretty much identical cultures, until the Korean War, and they got separated into two separate institutions. And also, they had like the same race, right? Like ethnically, North Koreans and South Koreans are the same, and yet now they have like vastly different economic outcomes. I think North Korean GDP per capita is like less than $1,000 per year. South Korea is somewhere around 50K. There's like a 50x difference. And then like Hong Kong versus mainland China, and Taiwan versus mainland China, and parts of Mexico compared to parts of the U.S. were like ethnically the same people and culturally the same people, and yet vastly different economic and like just policy outcomes. Um, and so yeah, governance is like very important. It determines a lot of our lives, like how well our lives are. I think we can all agree it's way better to live in Germany than it is to live in Somalia, and that's only because like of the way Somalia is governed versus the way that Germany is governed. So, yeah, that's kind of my high level. I think like broadly, there's kind of two important things that affect society. One is technology. Like obviously, people today are way richer than they were 300 years ago, and that's possibly a little bit because we've developed better institutions, but a lot because we've developed better technology. Right now, we have like cars and airplanes and mass production of goods. and like whatever you need, like food and toothpaste and housing. And so yeah, it's technology and then institutions. Like very clearly, there's a big difference between Germany and Somalia. They obviously have access to the same technology, um, because technology is like global. Like once you invent something, it's not like only some people get access to that. It's just that they have different institutions.
Yeah, I agree so much with you. Like internet for me was about propagating information, and arguably now a kid in a village in Africa, granted he can buy a cheap smartphone and he has access to cellular or internet bandwidth, but with Starlink it's going to get everywhere. He can consume the same content as a kid in a wealthy city, whereas a few years or decades ago you needed to be born in a city with um, like a big place with books to access the information, and if you were not there, your outcome were really limited. And I think with blockchain and all the governance we can build on top of it, we might make it so that good quality governance and coordination mechanism are accessible to everybody anywhere in the world, granted they have an internet connection. And so yeah, I don't see what's beyond governance. It's just if we fix that, we'll really change the game for most of the human beings on the planet. So, and I'm curious because you know a lot of things about economy, geopolitics, markets in general. You have a good kind of culture about these subjects. I learned a lot from you. I know you read a lot less wrong, the blog. You always have a piece to share when there is an argument about something. Are there books that mark you, or how did you learn all of this? What kind of data you consume?
Yeah. Um, well, first of all, I appreciate that. But I think probably the book that had the strongest impact on me, or just like the writings that had the strongest impact on me, was Adam Smith's Wealth of Nations, and I've probably read that book like 5 or 6 times at this point. Um, and like a lot of it is actually not completely correct. Like if you read it, he essentially his like theory of value is not correct. Like he thinks that value comes from the cost of production, but really that was like refuted in the marginal revolution, and it really comes from like marginal supply meaning marginal demand. Um, but yeah, I really like that book. I really like yeah rationalism, like less wrong, um, and then just like the fundamentals, like Marx is like a fundamental, or he's like a yeah good investor, great investor, and I read a lot of his memos. And yeah, I think a lot of people like information snack, and I do too, unfortunately, on Twitter. But I feel like I learned more from like one Howard Marks memo than I do probably on like 3 months of Twitter. And yeah, I just think there's a lot to be said for studying the fundamentals, um, as opposed to trying to be like up to date with the latest information. Problem for me is like I can't just study the fundamentals because I've got to be like the face of metadao or like spread the virus. And so I've got to be on Twitter. But yeah, like as far as learning goes, Twitter is definitely not the place, in my opinion.
Interesting. Makes a ton of sense. So more cool content than odd content, ideally. And while we're on the kind of personal background, I was curious to know where does your profile picture come from? I mean, I know, but for the podcast, can
Sure.
you explain? Because it became like this identity. At some point there was like 30 futards rocking your profile picture on Twitter. People love it. This hood, this mask. How did you come up with this?
Yeah, or some variation of it. Like I like how people put their own twist. I think my favorite is Dr. Soul currently has the profile picture with him with it, like the with hat on it. But yeah, I Stable Diffusion, like right when Stable Diffusion came out, I think was when I used it. And yeah, I probably over like the period of a day, or I think I spent 3 days generating possible profile pictures because I realized like um, profile pictures are kind of a one-way door. Like it's a bit disorienting to people if you're constantly changing it up, and so it's kind of important. Like it's kind of your brand, and people become more comfortable with you as they see your profile picture more and like become more receptive to what you're saying. And at least that's my rationalization for why I spend so much time generating PFPs. But yeah, I generated a bunch. I think I used like prophetic robot as the seed phrase. Um, and then I got one that I liked, and it wasn't this exact one, but then I used that as the seed for like a bunch of others. I probably generated like 200 that look vaguely like this one. Like some had staffs, some had different shaped masks and like different colored eyes and stuff. But I liked this one, so yeah, here we are.
Nice. It's how I found you on Twitter. That profile picture was intriguing, and you were sharing like good threads on how the SVM works and other pieces of the Solana protocol. And yeah, I think initially a lot of people were intrigued. A lot of people were looking for you at Breakpoint. Who is this Proph3t and what is metadao? Wild how far further along we are a few months later. I guess let's move into the second part of the podcast where we talk about futarchy and market dynamics. The first question is kind of the futarchy concept has existed for decades now, and it's been debated a lot in 2014, 2015 in crypto. A lot of Ethereum people, even Vitalik, wrote about it. Ralph Merkel wrote about it. The Gnosis people wrote about it, and yet nobody experimented with it. I never understood why. Do you have any idea?
Well, people are stupid. No, I mean, yes, people are stupid, but the probably uh, explanation of why this innovation hasn't been adopted, like hasn't even been tried yet, and others are, is I think the incentives, at least. So when I talked to Robin about it, and I asked him the same question, his explanation is that people don't want to give up control. And yeah, I think this is like directionally true. Like if you yeah, let's call it Gnosis in particular, because fuck it, I'm an anon, I can do what I want. If you are that Martin guy who runs Gnosis and you have all this like you have this DAO, quote unquote DAO, that you essentially control with your buddies, then why would you want to give up control to a market that's like not going to let you use the tokens how you want to like have to reward your friends and to take them along for the ride? Like, why would you want to do that? Like, sure, it's good for Gnosis, but it's bad for you. Um, and so, yeah, I think that's my explanation. It's kind of like why, uh, for example, a lot of these like countries that I would mention with shitty institutions, like take Swaziland for example. So Swaziland has like a king, and he has his like um, elites that he's like buddies with, and Swaziland doesn't have a lot of creative destruction. Like if you want to build a better, I don't know, probably telecom is a I would guess has some capture there. If you want to build a better telecom company that can offer better prices to consumers, uh, like they're not going to allow it. Like the state isn't going to allow that. And sure, it would be better for Swaziland as a whole if we could like open that up and allow the market to be more free. Like mathematically, even you can prove on like with supply and demand curves that um, free markets deliver like the most welfare to consumers in majority of cases, unless there's like a market failure. Um, and but it would not be in the interest of like those elites to do that. Like they benefit because even though the pie would be bigger, they'd have a smaller slice of the pie. And yeah, so that's my. I'm not completely sure, but I think that is a big reason why. Is like if you have a project, you don't necessarily want to give up control because it's not in your interest. Thankfully, Malik and I are kind of masochists, and we don't like. Yeah, we just kind of want to build the project. We're also in the position of like we have nothing without futarchy, so there's no like pie to pie to govern if not futarchy. And so yeah, I think that could be it, but I'm not 100% sure. Do you
Yeah.
have a hypothesis?
Uh, I'm not sure, but I would say that first, when your project's already launched, it's so hard to build futarchy. There are so many hypotheses to test and things to develop to make it work that if you focus on another project, it might take some time. And at the time, the Ethereum chain, the experience was so bad. Like if you have to put orders and bid on them, and you have to wait every time, and you have like this gas that moves away from you, like it was just maybe too much friction for the market to function. Like today we have Solana and everything's like not 100% perfect, but it's much easier to build. It's still hard to build it, but it's much easier than it was back then. But still, like even if the Gnosis people didn't experiment with it, I'm surprised nobody at least tried, and then say, okay, it cannot work for now because there's too much friction or because of this or that. But I'm honestly not sure, and I think what you says might be a big part of the answer. Yeah, I guess we'll never really know, right? But that's the question was because the impact of futarchy seems to be so huge that it's really strange why nobody has done it already. But yeah. And then I'm also curious to know, why did you choose to implement futarchy with conditional market, and did you explore other implementation possibilities?
Yeah, actually, so to stay on the topic of Gnosis, they had a different their way was, yeah, not conditional markets. It was to run like 4 prediction markets, because all that matters is like the ratio of pass tokens to pass dollars, and then the ratio of fail tokens to fail dollars. Like that's the essentially, what would this be worth if it passed, and what would it be worth if it failed? And then you do the thing if it would be worth more if it passed than if it failed. Is like the Eli 5 of futarchy. And Gnosis, the way they did that was they had 4 prediction markets, where you traded the conditional tokens for dollars or for ETH. And I thought that was like a little unintuitive for users. And the way that Vitalik talked about it in his blog post was to just run conditional markets for where like you allow people to trade in these markets, and then you revert all the trades, and then you can do that with conditional tokens. Sorry, you revert the trades in the thing that doesn't happen. Like if the market passes, you revert the failed trades. And yeah, that kind of made more sense to me, and I thought it was a better user experience. So that's why I did that.
Okay, makes sense. Because there are trade-offs, right? If you have a more prediction market based futarchy, you have to wait for the evaluation of the outcome of something. You have to use some form of oracle to know if which outcome materialized, and you have to lock capital until the end, and we see what was the outcome. So that's like, but at the same time, if you use conditional market, you cannot really know if the impact of the proposal will be the same value added that what the market thought it would be in the day trade. So for me, the way I view it is way faster, but it's also more sensitive to, I don't even know how to call this, um, but I guess reflexivity, and it's not necessarily dependent on the outcome. It's more what the market thinks today. Um,
Yeah, exactly. Like, I mean, I don't think that the Gnosis way is any more capital efficient or anything. Like, those problems can be solved the same way they can be solved with conditional markets. But yeah, I think like prediction markets provide insight on how likely an outcome is to happen. But given that we're the DAO and we decide whether the outcome, in this case, proposal passing, happens, it's like we don't really care. Like, that doesn't provide any value to us. The only thing that provides value is like the value of the token if it passed, and the value of the token if it failed. So yeah, and
nice.
it's much. Yeah, I just think it's easier like to think about, okay, what would I value this token if it passed, as opposed to like, okay, what's the probability of it passing multiplied by like what would the value of the token be if it passed? Okay, that's what I'm going to value like p meta at, or whatever, p drift or p dean or whatever. So yeah.
Yeah, and kind of following that, how much do you think reflexivity or Keynesian beauty contest affects futarchy? When you started metadao, you kind of seeded the market with a set of participants that were engaged and more rational thinkers, I guess. Most of the people who showed up in the Discord at that time, and you tested them with a quiz before you distributed the token. Um, it's kind of create like I don't really know if we could call this market networks effect, but if people in the market trade a certain way, they are likely to attract people who trade similarly. At least, like for example, if people value the price of the token using price to earnings metrics, they won't necessarily attract people who price it using memetics, because those people will tend to be not able to kind of guess what the market is going to do, and so that's kind of reinforce the market participant type that you have in a specific market. Do you think this is the directionally correct way to frame it, or how do you think about that?
Yeah. First, like, yeah, Keynesian beauty contests are like, futurarchy isn't perfect, and I just think it's better than the existing systems by an order of magnitude. And Keynesian beauty contests I see as like the biggest problem with futurarchy. There are some others, like for example, markets can't like run predictions on things that would make the world blow up, because financial contracts don't pay out if the world blows up anyway. Like, contracts are meaningless in that case. But sorry, I digress. Um, yeah, so Keynesian BD contest is just the idea that like some people buy assets because not because they think they're intrinsically valuable, but because they think a retard essentially is going to buy them after them at a higher price. And this is like what creates manias like the Dutch tulip mania. Like, people weren't thinking. I guess Dutch tulip's a little different, but more in like maybe .com. it helps fuel manias, especially like in meme coins. You see this a lot, where like people aren't buying meme coins because they want to hold meme coins for the next 10 years. They buy them because they want to dump on someone at a higher price. Um, and that kind of if what you're trying to do is like use price as a signal to determine intrinsic value as defined by the uh, discounted future cash flows coming from an asset, then it kind of screws with it. And yeah, I think like with Keynesian BD contests, they're pretty path dependent. So yeah, like meme coin traders are not trading, I don't know, software businesses. Like, yeah, meme coin traders aren't really, of course, there's like some element of memetics in all markets, but there are some markets that are more memetic than others. Like meme coins are obviously more memetic than, I don't know, short-term treasury bonds or I guess treasury bills. And prediction markets also seem to be not very memetic. Like people buying, I don't know, Trump win U.S. election at 30 cents on the dollar are generally doing that because they think that Trump has a greater than 30% chance of winning. They don't think that they're going to be able to dupe other people into believing that he has like a 40% chance of winning, and they're going to be able to dump on those people. Um, and so, yeah, I think there are like a few things we can do to resolve Keynesian BD contests. Kind of what you mentioned, like uh, leveraging the path dependence by starting out with rational agents so that when the marginal mimetic buyer comes in, they lose money because they're unable to predict that someone like what the next buyer is going to do because there aren't like retards in the market. Um, and so that's one way that like helps, and I guess is like a good thing that we did. Um, that's kind of a fragile solution though because markets can change very fast. Like today, talking about Meta is about 1,000 holders right now. Like it's completely plausible that in a few months' time, it obviously could still have the same number of holders. It could have less, but it could also have like 10,000 holders. And so 90% of the market, if assuming everyone has the same amount of capital, uh, is new. It's kind of, and then that shifts, right? It's kind of like if you grow a company really fast, then the culture can change significantly because if you grow a company slow, then the new people get integrated into the old culture. But like if you introduce all these new agents to the system at once, it's like not the same. And
Yeah.
so one way to potentially, sorry, did you want to say something? I just
No,
see
no,
your
no,
hand.
go on.
Okay, cool. Um, so I think whitelisted markets could be like one way to deal with Keynesian BD contests. You could have people prove that they trade or like demonstrate that they trade rationally, and then only allow those people to trade the futarchy markets or potentially even the spot markets. Um, you could potentially do something with like more long-term uh, dating, where like part of what makes venture capital not super susceptible to Keynesian BD contests. Um, of course, there are some like maybe you want to invest in a round because you want to be able to mark to market your portfolio at a higher price and you think someone else is going to buy later, but you don't get to realize those gains. Um, so like potentially we could do something with raising the liquidity of traders, or sorry, decreasing the liquidity of traders. So like if you buy, it's locked for some period of time. I don't know. And then yeah, I think those are like the primary, and then potentially using futures so that people are speculating not on like the present value, but future value, say like a year in the future. Um, and the problem with that is that people could short. Like I actually, I for really a whole day, I thought futures was going to be the solution, and I was like, I pulled up the Nasdaq futures during the time that the dot-com bubble happened, and I was like, oh look, the Nasdaq futures didn't go nearly as high as the Nasdaq did, so people were speculating that the crash would come and that it would go back down. Um, but it turned out I had the wrong Nasdaq futures pulled up, and that they actually did pretty much. They pretty much like went hand in hand because even though there were like quite a few informed traders during that happened that knew that it was going to blow up, they also uh, with the futures they could buy the future but then short spot so that they would like be pretty delta neutral, and that would bring the prices back closer in line. So yeah, I don't we'll see. And then the other solution that I think is like most promising in the short term is short dating futures, like sorry, not short dating futures but short dating contracts. So like if you have a goal that's short term, like maybe you want to increase revenue by 50% by next quarter, then you can run a futarchy on contracts that pay out relative to revenue next quarter, and then it'd be kind of like with prediction markets where people are mostly buying for an intrinsic reason as opposed to Keynesian BD contests. because I think, yeah, the shorter the duration of your contracts, the less Keynesian BD contests kick in. Like, imagine that there's a stable coin that's trading at 99, or no, imagine there's a company that's trading at 99 cents, and you know that tomorrow it's going to liquidate the company and it's going to sell, it's all shareholders are going to receive $1 worth of value. Then, like, yeah, Keynesian BD contests really don't apply there. You're only buying or selling. Like, you're not going to buy if it's $1.01 because you don't think you're going to be able to sell it to someone at a higher price. Like, the equilibrium price really is the intrinsic value. But then if it's like equities where the payout is theoretically like the dividends that come maybe 10, 20, 30 years in the future, like, it's harder for those to get priced. So yeah, basically duration, I think, is like how we solve it in the short term.
Yeah, and one thing that I think it's now, when it was a thought experiment, you had a few people thinking about it, not that many, and it's only theoretical answers, and we don't really know what's going to work. And now that we have a futarchy live, there is a lot more people interested, paying attention, thinking about it, and we also are going to see what reality throw back at us. So what works, what doesn't, and with the futarchy as a service launching soon, we're going to run a lot more experiment, and so it's all the things you mentioned. We're going to be able to try them and see what works soon. And I think there is no other way around, because the thought experiments, you create branches of this might be possible or this might be what happened. And the more you add branches and hypotheses, the less more fuzzy you kind of vision of what could unfold become. So that's amazing that now the futarchy is implemented and it's working in the real world, because we're learning so much even since the beginning. I guess I would like to ask, what's the main thing you learned since the beginning of the project? Was there something you thought you were right and it turns out you were wrong, and the reality convinced you otherwise?
Yeah, and I guess one way to describe what you're talking about is like we're kind of collapsing the idea tree. Like, we're removing some of its height because, like, yeah, as you test things, then they become more solid ground to stand on as opposed to just ideas. Um, what I feel like I honestly haven't, like, things have kind of gone as far as futurkey goes. Things have kind of gone how I expected them to. I don't think I've like learned a whole ton. It's been cool to test the anti-manipulation incentives, like when Ben created his proposal, and then like it was defeated because even though he's spent so much money trying to manipulate the markets because of the like natural incentives of play. Um, but yeah, I think so far, and the same, I've gotten the same reaction from Robin. Like, so far, futurkey is pretty much working as designed, no more, no less.
Okay, then I guess it's maybe in the future that we're going to learn new things and have to rethink some stuff, or maybe not. We'll see. Um, yeah, there are a few other questions on market I wanted to ask, but maybe we keep them for another podcast. I would like to talk also a little bit about the project we are going to launch next week, or this week, sorry, futurkey as a service. And like it's a beautiful UI we have now, and we also are moving away from order book and using an AMM. Can you tell us what you learned building it, more in the sense of building a product with a team? Nalok has been the main guy in charge, so I will have to ask him all these questions too. But you've been involved in it too, so you can share some stuff and also explain why you choose to pivot to an automated market maker. Yeah, let's start with that.
Sure. Yeah, I guess so. Then I actually have learned things like significant things since launching the original futurkey, but yeah, they're more like these low-level things. So one thing I think I've learned is that TWAPs and order books don't really work well together. Like, you have all these edge cases that you need to worry about, and there's just no guarantee of constant liquidity around the mid price. And you need to have all these like workarounds. Like, for example, we needed to set a minimum amount of meta that could be traded in the order book, to get around a vector where like someone creates a really high bid, but then it's not an economically significant bid. Like, maybe they create a bid of like $1 million per meta, but only for 0.000000 or one Hansen worth of meta, which is one to the e negative nine. Um, then like no one is really incentivized to sell into them because the gas cost will probably be higher than like what they'll actually make from the trade. So yeah, you need to have like these minimum sizes, and yeah, it just doesn't really work well. I think X times Y equals K AMMs are like really better for TWAPs. And yeah, it's also nice to just like have constant liquidity in a market. Like, what we do is we require a proposer to, like, in the original version, the anti-spam mechanic was that you had to pay like a price to create a proposal, so that people can just like create infinite proposals. Um, but now what we can do is, like, as a proposer, you just have to create a certain amount of liquidity, so like maybe $5,000 with liquidity in your proposal markets in order to create the proposal, and then that also solves for liquidity to some extent. Of course, like not all of it, and other people can also provide liquidity if it's needed. But yeah, so that's why like AMM, and I think it also just like provides a user experience that people are more used to than order books. Um, and then yeah, I'm really excited for the product launch. As you mentioned, Alec, who's kind of become like a co-founder of metadao, was the one leading a lot of that product development. I helped out a little bit. And yeah, just like super excited to launch. I think what's been really cool is we plan to just kind of launch the product and then get customers like DAOs to use it. But we've been getting kind of like DAOs knocking down the door, so to speak, wanting to launch with us, wanting to use the product. And that's like really cool. Like we're going to launch with, I believe, Dark Protocol, which is like the new private payments on Solana protocol, and I think Dean's List and Drift, and um, probably one more. Oh yeah, and Future DAO. And I think that's awesome. Like, obviously, you never really know, but it's starting to seem like we're seeing some early signs of product market fit, which is cool. Which kind of makes sense given that like how bad token voting sucks. So yeah, that's pretty much my high level thoughts on like the launch, and yeah, just excited.
Nice. I think there is also on that chat from Or that was interested in exploring futarchy, and a few
Right.
others that Nalok has been in contact. Nalok is talking to everybody. This guy never stops. I guess also I'm curious, what would be the next things we should build for futarchy as a service? Would you add some features to it, or do you think it's good enough in its current state? Because the goal was to build an MVP kind of as fast as possible and iterate. The proposal is coming to an end. So it was, I think, a 8-week proposal. I'm curious, I don't know yet if Nalok is going to redo another proposal to bring the product to the next stage. I mean, nothing is official, so do you have any things to share regarding that?
Yeah, I'm not 100% sure, but I think order books will be a nice feature to add. Like, so you can, even though the TWAP is based on the AMM, you can still place limit orders, and then like the UI automatically routes between them based on whichever gives the better price for the user. Um, I don't know. I think it'll be cool to do things around distribution as well. Like something Tolly tweeted about yesterday, or I guess morning here, was like futarchy.fund. So the idea, like, you launch a meme coin and the meme coin uses futarchy to govern itself. I think that could be cool. Um, but yeah, I'm not
Yeah,
sure.
I
Actually,
I think
sorry, go ahead. Actually,
no, I was just gonna say I think Nalok already got the domain. Yeah,
did he?
just
Oh,
in
okay.
case. Yeah, this guy is just like shoots every time he sees some things. Yeah, sorry. What were you going to say?
I was just going to answer your earlier question with one more learning I've had, which is that I don't know. I think uh, this is like a similar learning that a lot of people in Silicon Valley have been having, but like I think remote is like not as good as we all in COVID times thought it was going to be, and like in person is still pretty good, especially in the like critical times when you're in crunch time, like trying to ship the product. And so yeah, right now we're based, like a few of us are based. Obviously, like metadao is not based anywhere. Like metadao is a DAO, but it hires like me and Alec to get shit done for it. And me and Alec, and like a few people as well, like Lucas, Tomash, you, Marie, are all here in Malaysia, because like we thought it was great to be able to get people in person to like ship the thing, and yes, and that's like working out so far. I feel like we're getting more shit done while we're in person.
Yeah, definitely share the same sentiment. Um, I also was curious to ask, where do you think futarchy will be the best used? Do you think it will be on grants, like the kind of standard consensus today, or do you think it can be used for other things like a DeFi risk model, or DePIN emission, or network states boundaries, protocol parameter adjustment, or even to get back to what Tolly was saying, I think for tokenomics, it can fix also distribution, because you today when founders they decide on the tokenomics, they have to draw the pie chart, and most of the time they check what other protocols have done, and they reach out to their friends, founder friends or investors, and they ask their inputs. But everything happened kind of backstage, and the community cannot give feedback, because if they disclose the token is going to happen, they might have a ton of farmers, so they want to win but not to promise anything because of the legalities and all these things. And they end up designing their tokenomics with a plan for 4 years ahead, with like often it's like the team, the investor, the foundation, the liquidity, the community, the grants, stuff like that. And it's really wet finger up in the wind to design how much is needed for each side, because you don't know what you will need in 4 years, right? There is no way to know. You're allocating in advance for a box you don't know the size of ahead of time. And so maybe like futarchy can also a project launch their tokenomics, where you would have almost all the supply distributed from day one, and you mint as you go, and futarchy ensure that the dilution can only happen if it's plus EV for the token holders. Yeah, I guess because right now we see a lot of people really excited about using futarchy for grants, because the politics and most of the DAO like Kabuki make it that there is a lot of money wasted today on grants, and futarchy could prevent that. But futarchy could possibly be used for a lot more than grants. We haven't saw that yet. What's your wild bet? Where do you think it would be the most useful?
Yeah, I mean, I think futarchy is like actually not as good for grants. I mean, I think it's reasonable for grants. I think it's better than the alternative, but which is like a committee. Like I remember once on an ETH DeFi, I actually competed for a grant against someone who was on the grants committee. And I'm just like, what the hell is going on here? Like, this should not be allowed. Like, obviously, this is going to be driven by primarily politics and not which is like better. But yeah, I think it's so like at a fundamental level, futarchy works best for things that have a strong impact on the token price, because that's where like the clearest you can see it clearest in the futarchy. And that tends to be like, I mean, I think people are doing grants because it's kind of it's an area that's less. It's like if we screw up grants, it's like not a huge deal. But if you screw up like token allocation, it's a pretty big deal. But I think that's like where futarchy shines is those big decisions. Like, how should you allocate your token? Should we do like a big emissions program to incentivize new adoption? Should we fire the people on the ground and like take away their unvested tokens because they're doing a bad job? Should we like give a bunch of money to a fund that funds legal defense or like regulatory relations or something? If you're like a Uniswap type project, yeah, like big decisions that have an impact on token price, I think is like, or a great example. Actually, like the clearest example is like a liquidation. Like Parent was a project on Solana that like did this terrible liquidation where like so they raised $80 million in IDO, and then they gave themselves a bunch of like 90% of the token supply, and then they did a liquidation where like you get money proportional to your token holdings. So they essentially just like gave themselves $72 million, and because they had all the tokens, they can vote for that. So yeah, I think like stuff like that is really where futarchy shines. Yeah.
So you think you would use it with other governance mechanism, like futarchy is a like big safeguard for important decision, and I think you alluded to optimist governance, where you can maybe you want to explain what you meant by that.
Yeah, optimistic governance is an idea that I'm playing with, that I'm kind of bullish on, which is, yeah, I mean, like, obviously, I mean, maybe eventually we can get to a world where every single decision is like made by markets, right? Like, even how big do you want, like, I don't know, what copy do you want on your website, or like, um, how much should we pay this person, or all these like micro decisions. I guess how much should we pay is kind of a bigger decision, but depending. Um, but for at least the foreseeable future, there are going to be some decisions that you want made by like appointed people, and I think optimistic governance is kind of like a way to do that in a way where the market still has full control. So the idea is essentially just like how with optimistic L2s, the way they work is that sequencers publish state roots to the blockchain of the L2, and then anyone can post a fraud proof proving that the state root was invalid. So like maybe the sequencer tried to give themselves all the tokens on the L2, and that in turn keeps sequencers valid, because we optimistically assume that like yeah, sequencers aren't going to constantly be posting invalid state roots because they get bonded or whatever. They have to post money up, and if they post an invalid state root, they get slashed. So most of the time they're going to be okay. And so we get to like scale the blockchain, or scale like the trust, without like, because you, while still getting higher throughput, without like increasing hardware requirements or increasing throughput of the base chain. So like even if we, the idea of optimistic governance is you essentially have this like higher level governance. It could be a futarchy. I think it'd be best if it was a futarchy, but it could be voting. Um, and you have like a multi-sig like thing, where a sequencer, so this would be like someone on the ground. So in the case of metadao, me or now like would be like the sequencers. We could post transactions to the time lock or the multi-sig, and by default, in like some period of time, they would go through. So maybe like after 7 days, they would go through. So I could create a transaction to like, I don't know, pay someone some money to like build a website for metadao, and then by default if that would go through, but the DAO could also raise proposals to cancel transactions that I raise and to remove me as a sequencer. And so like ultimately I still have to really do what the market uh, wants. Otherwise someone will like essentially post a fraud proof, in this case like post a proposal that shows that I did something bad and then get removed, without like increasing the throughput of futarchy. So yeah, that I think is like one idea that I think could be pretty cool.
So instead of having to draft a proposal for everything, you would just enqueue proposal. They go through after, like, let's say a week. And if somebody thinks that one of the things you propose is wrong, he raises a proposal. And if this proposal is agreed on, then your transaction doesn't pass, right? That's how it would work. And so there would be an incentive for the person to stop you from doing something. I guess you would get something out of it if it's kind of
Yeah,
fraud-proof pass.
there would be like a bounty. So if you can get it,
Mm.
like it would be like if you can get any proposal through that like cancels a transaction or removes a sequencer, you as a proposer get like, I don't know, call it 20K or 50K or like some amount that incentivizes people to watch me to make sure that I'm like, to see if they can dig up any bad things on me. And if they can, yeah. So essentially, like I'm directly held accountable to the market.
Interesting. Yeah, I like this idea a lot. We're already almost an hour in. There are many questions left. I won't. I will keep them for another episode. But just when I would like to ask maybe two more. One thing you wrote about was three type of futarchic agents in a blog post where you explain your vision for metadao, having entrepreneurs, cyber agent, and analyst. I really like that article, even though it's pretty short. It explained how we could organize in a very decentralized way, right? And there are trade-offs between being fully decentralized versus not fully decentralized. Like when you have a small team, kind of Silicon Valley style, you can ship things really fast, and you already know who you're working with, and it's easier to build things quickly. But when you're like big decentralized organization, it's harder to know the different person who works well on what. Even for the market, for example, as an analyst, how do I know that this entrepreneur is good or that the cyber agent is recruiting are qualified to do the job they are saying they are going to do? Can you explain first what are these three different futarchic agents and how can we build stuff like, for example, identity, reputation, all these things for this way of building things to work better?
Sure. Yeah, and I'll just say like those three roles, which are cyber agents, which is like the people building stuff, entrepreneurs, who are the people coordinating stuff, and then analysts, which are like the people who trade the markets. So those descriptions are partly normative and partly positive in that like I'm both trying to just describe the system as it is and also how it should be. Um, and because like inherently in a future you do have people that trade proposals, and good analysts are people that make good trades and make good money off the proposals. And yeah, you always have like people that coordinate the work and then people who actually get shit done. So um, yeah, in terms of like what we can do, yeah, I think some sort of like identity system would be great. That would reduce uh, transaction costs. And if you actually like go back to why organizations exist in the first place, like if you read Ronald Coase, who yeah, is like the OG economist who figured all this stuff out. It's all transaction costs. Like they're the reason why we aren't just all, because you can imagine an alternate universe where like everyone is just a freelancer, there are no companies, and like if you want to get something done, you can hire someone else, or uh, yeah, that kind of operates in this more like web-like fashion. Um, and the reason why we don't have that is because of transaction costs. Like for example, if you want to hire a dev, it's like easier to just like hire one dev and like pay him a fixed rate, as opposed to like every time you want to write a single line of code, like hiring someone on Fiverr to like write that single line of code. Obviously, that's extreme, but that like goes to show um, why like companies really exist. And stuff. So yeah, transaction costs would be improved if we had like a digital identity system where people who work on metadao have like some credibility, like almost scores maybe, um, that are given by past projects they worked on. But I don't know how that'll like what the best scheme will be for that, other than like I think that's promising, just like not yet. That's almost more like once metadao gets into more network state y like status, where it kind of becomes this like new country on the internet that's governed by this novel mechanism, that we start getting into questions of like, okay, how can the state, in this case the DAO, improve like this the country, which is like, yeah, helping the commons. Yeah.
Makes sense. Yeah. I think this will be super cool when it's rolled out, but might be more than 6 months away from now. Definitely, because there are many ways to implement such thing, and right now the resources are going to be allocated a lot to fast and onboarding more people and collecting data and improving the models and so yeah, but that would be great. Like I wish if you trade the market as an analyst, you could have a kind of, you're not obliged to have all your wallet in that, but you could have a public wallet that show that on proposal you were kind of rational, for example, and so when you express your opinion on a forum, you can attest that you're not like bullshitting, or like as a cyber agent that you can prove that the people you work with and the people who review the work and the entrepreneurs say that it was good to work with you and evaluate your like skill set and different points, so that when other analysts that don't know somebody have to trade a proposal, they can just like quickly see who's included in the proposal and have they worked prior and what do they know about them, and so this information can flow much more easily. And I think that would be interesting also for the people using futarchy to use a system like that. Yeah. Well, I have to pick in the many questions I have left. I guess we'll end with uh, let's think, let's dream a little bit. In 5 years, where do you think the metadao could be? Do you think we get at some point a state using futarchy to take a decision in the next 5 years? Do you think it's a reachable goal?
uh so you're asking where we could be, right? Not where we will be. Yeah. I mean, what's a state, right? Like states are things that other states recognize generally. Like people have tried to create states, like Liberlandia, that control land, but if they don't really control the land because other states don't recognize their sovereignty, then they're not really a state. So, and I don't think in the next 5 years, like governments are going to recognize metadao as a state.
Oh
Uh,
no, sorry, I meant a state would use futarchy to take some decision. For example,
oh,
sorry.
cool. Yeah, sure. Because I mean, but that, just to be clear, like that could happen in the next 15 years. Like metadao or something like it could kind of achieve this network state concept that Balaji talks about. But yeah, so futarchy. Yeah, I think like a probably not a national government, but I could definitely see like city or local governments using this at that stage to manage some of their affairs. At least, like you can also do futarchy without having it actually make the final decision. Like you can get kind of futarchy guidance, and that's not even permissioned. Like you can provide futarchy guidance even if the government doesn't actually want it. Like you can run markets on like what would the value of GDP be if Joe Biden won, and then what would GDP be if Trump won, even without like the national government of the U.S. saying like, yes, we want this. So yeah, that could definitely be like the markets. I think there's like assuming futarchy works, like I think there's probably an 80% probability that within 5 years we start running, like there are some futarchic markets and like government decisions, and maybe a 50% chance or 40% chance of like governments kind of cooperating in that, like city governments actually using futarchy to make some of their decisions.
Great. Well, thanks a lot for joining us today. I mean, I really think this project has a potential to be a fourth turning in crypto, and it gave me joy again, because sometimes you're like, there is not that much exciting stuff happening in the governance landscape, and I've seen people get really excited about futarchy on Twitter, on Farcaster, on the Discord. The people I talk to sometimes they tell me like it's been a while I haven't seen a project that meet this bar of doing things for kind of the right reason or something. I think Nalok, he also said something similar, that when he saw the metadao, he was like, oh damn, this is something that's goes back to the cypherpunk roots of what he used to love in crypto, that we see a bit. And it's not that it doesn't exist, it's just that it's diluted in the many kind of short-term oriented project. There are still so many areas of crypto I found exciting, but metadao for me is my little son right now. So yeah, and I think for many people, so I'm super excited for what's coming. We're gonna change a lot of things, and yeah, I'm just super excited.
Yeah, so am I.